Hello, everyone. Thank you so much for joining us on this Saturday morning. Hope you have a wonderful weekend this week. All right, so just a little brief introduction. So my name is Wing Lock, and I'm an associate at Leet Capital. I'm going to give you a short introduction of what Leet Capital is. So we are one of the 10 licensed operators to conduct ECF. So essentially, ECF is just providing investors access to private market deals. It's as simple as that. But I'll go into a little bit more detail afterwards. So if I ask, how do we actually get our license, right? So the thing is, our sister company, Leet Ventures, has actually been in the private market scene for over 10 years, supporting, growing, as well as investing in early stage companies. That's why that gives us the ability to vet and conduct due diligence on the deals that we put on our platform for ECF. So maybe it's a little snapshot on everything altogether. So obviously one of the 10 licensed operators in Malaysia for ECF, and then we help companies to raise funds through the private market. And the main perk that we can provide to our issuers as well as our investors is that it is part of a bigger ecosystem that is Leet Ventures. So from there, we can provide issuers a diverse avenue of funding, right? So in terms of retail, we can provide access, angels, we can provide access, as well as institutions. And when it comes to business collaborators, we have access to corporates, startups, SMEs, you name it, right? Like MNCs, PLCs, whatever it is, we also have access. So on top of that, we also provide support in terms of strategy, because we've been doing that for over 10 years with early stage companies. So we want to help these different businesses navigate the scene. All right, so what is ECF and how does it work? It's very simple. So if you guys are well versed in the public markets, it's pretty simple, right? So you're just giving cash in exchange for ownership of a company. So let's just say you invest RM1 in a company at a value of 1 million. You hope that eventually it becomes 10 million, 20 million, and then you make that upside there. So it's pretty much the same thing, right? The concept is exactly the same, but now we're doing it in the private markets. So it's really no different from, buying shares on public markets and all that. Maybe the difference is just liquidity and also risk tolerance, but there's also a difference in upside. So if you have any more questions regarding ECF, you feel free to leave it in the comments below and we will talk about it more. So just looking at the state of things, right, in terms of some numbers. So I think the scene for ECF is still relatively new, but it's 420 billion raised based on backdated data, which is 2021, and it's only growing. So we'll definitely update the slide. In terms of additional perks, right? So as of now, you get a chance to invest in private companies, and there is also a matching fund from the government. So in technicalities, you can say you're investing with the government. And in terms of tax incentives, so if you have invested in ECF companies, you are also entitled to certain tax benefits. And in terms of potential perks, we can, if you want to know more about these perks, you can go to our website and check out all the different deals that we have and all the different type of bonus structures that are in place. So for now, the company that we're looking at is Akru. So when it comes to Akru, you get a bonus share of 26% if you invest in 500,000 and above. So to kick off this webinar, I would like to invite Julian, the CEO of the first homegrown robo-advisory firm in Malaysia, Akru. He has a strong background in terms of portfolio management as well as banking. I'll hand the time over to Julian.
Hi, everybody, and thank you, Winglock, for that introduction. Thank you so much, everybody, for joining us this weekend. I hope to make this hour or so not so boring for you guys. Hopefully, I can tell you all something interesting about the robo-advisory landscape and in a broader perspective, the wealth management landscape, which is what we are dealing with here. Just a little bit of background, a quick background. We were set up in 2017. We got our license and went live with AkruNow.com in August 2020. And this is our second round of ECF with Leet Capital. I will take you through why you should invest in the wealth management industry that is led by a robo-advisor, all right? And right now, Akru is the only robo-advisor that you can invest in directly, as in become a shareholder. So I'll take you through why this landscape is so appealing and so attractive. Let me just share my screen. So when we want to attack a market, right, we got to ask how much is there in that market. So robo-advisory is in the wealth management market. How much wealth are we talking about that exists in the wealth management market, especially as far as retail is concerned, all right? We don't want to talk about that very high affluent, sophisticated market where, you know, the sky is the limit for them. And that market is serviced by very high finance investment banks like Goldman Sachs and Credit Suisse and all these people, right? So I'm talking about retail, and this is direct retail are things like current accounts, savings accounts, CASA, and unit trust funds. Indirect would be government investment institutions like EPF and QUAP. QUAP is the government asset manager for civil servants. They are the EPF for civil servants, all right? And how I define the wealth that exists in the market is that it belongs to us, all right? Directly, the bank savings accounts belongs to us. It belongs to the people. Unit trust belongs to the people. Indirectly, institutions with money like EPF, that money also belongs to us. And broadly speaking, when we look at wealth management and its service to us, the question is, what do we want? Actually, what do we want? Yeah, is it like a Robin Hood style investing where every day you go in, you touch your phone, and you trade, buy and sell stocks? Is it that, or is it the case that you just want your investment settled, and then you do the things that you like? You go out for a hike, you go cycling, and you go traveling, right? What is it do we want in terms of wealth management, right? So that's the question that we're asking, and that's the question Akru is asking in the entire 5 to 6 years that we have been in existence. So let's look at the money that is in our bank accounts, all right? Current account, savings account, fixed deposit. It's a lot of money, right? You're talking about 1.3 trillion that consists about 480 billion in the current account, about 230 billion in the savings account, and FD plus more in that category that Bank Negara defines is almost 600 billion. All right. So what is this money doing there? Is it the case that everybody wants to put their money there and earn that kind of very low, 0 to low interest rate? Okay. Is it the case that they genuinely want to do that, right? Maybe some of them do, but maybe not 100%, right? Very, very little interest rate. Now, what about EPF? EPF, the title here says that EPF is a wealth manager, but EPF is also a distributor. You know why? They have 1 trillion ringgit in assets, right? We kind of know that because 1 trillion is this huge number. Just recently, they passed that mark. Even with the pandemic withdrawals, they still have about 1 trillion as of the end of 2021. Now, they are a distributor because they allow every year for people to, if you fulfill certain conditions, for people to withdraw to put into unit trust. And as of 2021 alone, 8 billion ringgit was withdrawn from EPF to put into unit trust by almost 485,000 members. This results in an average withdrawal size of 16,500. So I want you to remember these numbers, okay? Because this has to be compared to what Akru is forecasting. Akru is forecasting not 485,000. We are not forecasting an average account balance of 16,500, but EPF itself, every year, 8 to 10 billion ringgit is being withdrawn to put into unit trust. Now let's look at the unit trust itself, all right? These are October 2022 numbers. The number of account around 24 million. It's quite stable at that level throughout the years. The total funds that's managed by the unit trust is almost 500 billion. So this is almost like half of the EPF. And if you do the math, the average account balance will be about 20,000. The number of unit trust management companies, 40. So I want you guys to look at these numbers as well and compare to the forecast that whether it's Akru or anybody else, right? Any other robo-advisors there in the market, what are we asking for from, what are we forecasting in our numbers, right? There are only 8 robo-advisors in the market. There are 40 unit trust management companies. So if you ask the question, some people are saying, okay, 8, how to survive? 8 robo-advisors in the market already. So many, how to survive? Okay, but there are 40 unit trust companies out there. I leave it to you to challenge me later on this idea. Okay, there are 40 unit trust funds management companies out there. There are 8 robo-advisors in Malaysia. All right, the funds that are managed by these 40, almost 500 trillion. And you know what? It's a very, very expensive ecosystem. So on the one hand, you have 1 trillion in the banking accounts that earn next to nothing in interest. And then on the other hand, you have 500 billion in unit trust that's very, very expensive. So where are we now in the robo-advisory landscape? In Malaysia, there's 1.5 billion ringgit in total. So remember these perspectives, yeah? 1.5 billion against 500 billion unit trust funds, against 1 trillion EPF assets, against over 1 trillion in the current savings and FD accounts. Incidentally, in Singapore, they also manage about 1.6 billion, and in the US, where robo-advisory started, is about 1 trillion right now. And we can see that you just see the slope of the bar charts. The growth is quite strong. Statista actually forecasts that by 2027 in Malaysia, the funds managed by robo-advisory in Malaysia will be about 3.6 billion. It's still nothing compared to the funds that exist out there in the market, right? At this point in time, I just want to talk about passive investing, because this is how robo-advisors do their work, right? Without passive investing, there's no need to talk about robo-advisors. Now, passive investing is to be differentiated from active investing. Okay, active investing basically buy, sell, buy, sell, buy, sell, buy, sell, buy, repeat. All right. Passive investing, buy and hold. Why do we do this? Why do we do passive investing? Okay. If you buy, sell, buy, sell, buy, sell, buy, sell, buy, that kind of style, versus the market, which over the long term has an average return. Everything in the economy is connected, yeah, is linked. Inflation, GDP growth, and all this. So over the long term, for example, the S&P 500 index, which represents the 500 largest US companies, have grown to the tune of 8 to 10% per annum on average since they started monitoring the index in the 1920s. Okay, every year, 8%. So the question is then, why do you want to buy, sell, buy, when you can just leave it there, buy and hold until you withdraw? Let's say you're investing for a very long term, leave it there and just settle for 8% per annum in US dollar terms, rather than if you buy, sell, buy, suddenly you miss that thing, like right now, last year, the markets were crashing and then people start selling, right? And then suddenly the market rebound and then you miss that and then you jump in again. You're buying at a more expensive price And worse still, what if it comes down again afterwards? Then it will tell you to sell again, all right? So we have this picture here on the screen. This is from Akru's Instagram, right? Passive investing is just like, you just follow ways lah. You go from point A to point B, you follow ways, you just get there in the average time. Now, some cars, right, on the road in a traffic jam, they try to overtake, cut in, cut out. Will they arrive faster or not? They won't, right? Maybe they will arrive 30 seconds faster than the guy who just stick to one lane, except the fact that they're stuck in a jam, right? And worse still, when you go in and out of traffic, you waste petrol, your car maintenance go up, right? This is the same thing with active investing. When you buy, sell, buy, sell, buy, you actually incur a lot of costs, right? Your brokerage costs, the cost of missing market opportunities, and so on. So one more example, right? Our parents, or maybe some of you are property investors, right? My parents bought a property in 1970s. Wow, so cheap that time. Actually, it's not that cheap compared to their income. It's quite expensive lah. But in the 70s, the house was 20,000 ringgit or something like that. Today, the house is $1 million. So did you see our parents buy and sell the property according to what the US Fed said last night? No, right? They just held on to the property, and then 20, 30 years later, the property was worth a lot of money. That's passive investing, all right? Our parents and grandparents did passive investing. Now we have coined a word for it, for robo-advisors, right? Passive investing is what robo-advisors do. Why is passive investing causing an investment revolution? Let me tell you why. Because no one has succeeded in beating the market all the time. What's that? I hear you ask, what about Warren Buffett? Warren Buffett, so terror, right? Did he actually beat the market all the time? The answer is no. Okay, so if you look at this picture, the dots here are times when he performed below the S&P 500. There are many years. There are many years, even you're going way back to the 60s when he first started, 70s, right? Not every year that Warren Buffett performed and beat the market. Obviously, his returns are amazing, right? 3,000%, 3,000,000% rise. Okay, no one can challenge that. But it depends on when you bought, right? If you are an active investor and you start buy, sell, buy Berkshire, which is Warren Buffett's company, you might not be able to catch some of this performance, So the strategy, even if you want to follow Warren Buffett, is that you just buy and hold. You don't buy, sell, buy, and try to time Warren Buffett because he's an expert investor. Same thing with us, right? We are just refusing to time the market. We're just going to rely on the market. The guys who do active investing, I mean, they are good. A lot of them are good at their jobs, but they're not good all the time. And we at Akru, we have made this decision not to time the market. Whenever you give us your funds, we'll just take that funds, put it in the market until you withdraw. Why would you? What's the reason you would withdraw? Okay, you are going to withdraw because you want to spend the money. It's not because you feel that the market is too high or very jittery or anything like that. This is very important. This represents why there is a new direction in robo-advisory. I will talk about this later. Now, talk about expert investors. Yeah, this is the US market, 2020 numbers. Every kind of fund that is compared to their own index, their own benchmark, yeah, whether it's a large cap, small cap, domestic fund, over the long term, 80 to 90% of the funds actually underperform. These are supposed to be expert fund managers. Why is there such a high percentage of underperformance, right? We're paying them good money to manage these funds, but they're underperforming. this is the US, right? 80 to 90% of the fund managers underperform the market over the long term. Even in the short term, the performance is not that great. It's not only a US phenomenon, but everywhere in the world. Okay, you see that the red color boxes on the right, most of the fund managers around the world, they underperform the index, respective index that represents the area that they're investing in. Okay. Locally, if you dig for information, right? And we have Morningstar, so we use Morningstar to get all the data, and you can see that the unit trusts that invest in Malaysia, they have also underperformed on average the Malaysia, which is that we are using MSCI Malaysia, right? 7.5% for Malaysia per annum over the last 20 years to 2020. The unit trust only did 6%. So then you compare last 10 years Malaysia to global. This is a different market, yeah. Last 10 years, if you invested in a unit trust investing in Malaysia, you only get 3% per annum over the last 10 years. But the global scenario gave you 13% per annum. So this comparing Malaysia to global. Should you just focus your money on Malaysia, or should you go global? Right? The answer is very clear. Global will give you better diversification to growth, to innovation, to all the latest technology. All right. But this is also about the performance of professional fund managers and how robo-advisors are causing a revolution here. We are saying to ourselves, if you can't beat the market, why not just buy the market? And this is what Akru is doing. So if you look at generally the performance of robo-advisors in the market, we generally, whether it's a good market or a bad market, this is the unit trust. Yeah, in a good market, we all do, most of us do better than the unit trust. In a bad market like 2022, we do less bad than what the unit trusts have done. All right, just like for like comparison. And there was also a report in The Edge recently, dated November 2022. Akru, if Akru was ranked according to the Lipper Fund table, Akru would have been number 5 against 51 actively managed unit trusts for the global category, right? Number 5, just by doing nothing, just by being passive. Now, when we do not much, the biggest part of the other part of the revolution is cost. When we do not much, we are in a position to be very, very cheap. How cheap are we? We are very, very cheap. Okay, so the unit trust and even the online platforms, they will charge you a sales charge. Akru doesn't. The fund expenses every year, what the funds actually charge you, the fund manager will charge you 1.5 to 2%. That's still very expensive. If you look at long-term returns of the market, just now we saw that the Malaysia return, unit trust return only 6%. Just imagine, every year they charge you 1.5 to 2% out of that 6% returns. That no wonder they underperform, right? Akru's funds, just a fraction of what's being charged. And if you add advisory, and this is important because advisory will become more and more important for the Malaysian public. If you charge they charge 1%. You see the first year cost becomes so much that you start losing money before you even start to make money. Okay, and the cheapness of Akru actually allows us to do B2B because we can lower our costs further for the B2B in order to provide them a viable business model. All right, more on that later. So as I was saying earlier, it's not just about investing, right? It's not just about you touching your phone all the time to do actual investing. It's about you not doing investing, that robo-advisors are changing things for people because You just want your investing settled, and then you do the things that are important, like your career, your family, your hobbies, and so on, right? And don't forget that when you talk about investing, a lot of us think about professional investors, which are just the minority of people who need to invest. Okay, the Grab driver, the Starbucks barista, the engineering student, the architecture graduate, uh, and anybody else who just cannot tahan investing. Okay, they just don't want to do it. Okay, that's the majority of the people. The people who like investing are the minority of the people. So when we address the market, we shouldn't speak the language of the people who want to invest. We should speak the language of people who don't want to invest. That's who we are addressing, and that's how big the market is. Now, if you look at this is a Fund Supermart, which is a platform I respect very much. Okay, they are a great platform. They have grown so well throughout the years. It's very sophisticated. Who are they talking to, right? You got like ETFs, you got bonds, managed portfolios. Do people understand what that is? When they get onto the website, they oh, okay, I want to buy this bond. No, they don't, right? Um, they don't know what to do when they get into a website like this. But this is a very, very good website for sophisticated investors. But if you go into a platform like Akru, then basically what we are selling are your goals, right? The most important things in life, your retirement, your kids' education, saving for property. So we're not hitting you with ETFs when you come onto Akru. That's not the point. What we are saying to you is have this peace of mind, plan out your retirement, plan out your education. The investment is done. It's in the background, it's running in the background quietly to give you peace. It's done. This is all your savings being put to work. And you can see all the data when you get into your dashboard, your retirement goal. You can see the progress, you can see what's happening. And even if you want to see what we have invested in, you can, right? So just a summary, why robo-advisor is going to provide a better solution than traditional investing. There's no need to choose funds. There's no need to analyze stocks. You can set up your financial goals for any financial needs, and Akru will come up with more to make our website more awesome. There is clarity. There is status, progress status. We are practicing passive investing. We are ultra low cost, and you have a much better experience by coming into the Akru platform. Now, because of our low cost and because of how expensive it is to acquire B2C customers, Akru has pivoted. All right. In the past, we were focusing on B2C, and basically B2C, the customer acquisition is very expensive. It's not that the demand for our service is not there. All right. It's just that people don't know us enough yet to automatically come to us. Right. If they think investing, they say, oh, okay, public mutual. Oh, okay, UOB Bank, things like that, right? But in order for us to acquire the customer, we got to spend a lot of money. So we are saying to ourselves as a business case, instead of spending that money on advertising, which we don't know where it will go, we will spend that money to share with the B2B partner. All right, because when we share those fees with the B2B partner, they'll be happy, there'll be incentive. Their advisors would make a viable living out of distributing robo-advisors, out of including robo-advisor into their advisory process. And we've had success with this. There are a lot more B2B partners in the pipeline that we are very excited about, but I can't tell you the names yet, but the interest is very strong. All right. They're knocking on our doors every day. We are also knocking on their doors, and people are responding. People are sitting up to the way robo-advisors are investing other people's money, right? OPM, other people's money. So One of the MOUs that we signed is with VKA Wealth Partners. They're one of the largest independent financial advisory firms. They have 300 advisors. And Akru, because we're sharing fees with them, with their advisors, they can make money out of Akru. Yeah. With Seasons is very exciting. They have a captive market of 1.6 million civil servants. Okay, so we just sell to Seasons. Seasons will sell to the 1.6 million, and then hopefully we get the assets coming in that would boost Akru's growth going forward. So these are some of the press releases in the various press in the market. So before I end, just want to give you this special offer, as we've said that there would be a surprise here. And basically, the more you come in as an ECF investor, we will give something back to you. We will waive the management fee charge under Akru between 1 and 3 years. So this is just an incentive for us to give you as one of our valued shareholders. All right, with that, thank you for the presentation. Happy to take any questions from you all.
So I think we do have one question from the chat. It says, there's a couple of questions, but I'll just start with the first one. What is the go-to-market strategy moving forward?
So the go-to-market strategy, as I mentioned, is this pivot from B2C to B2B. And we're basically targeting our fund size to grow to about 300 million by the end of 2023. And in fact, we are very ambitious about it, but we're also very realistic about it. We have signed the 2 MOUs, and we believe that we can execute that. Obviously, I am under no illusion that is very ambitious, but we remain positive, and with the support of our partners and more to come, I think we'll be able to achieve that as well. Just to break down that 300 million target, about 250 we have allocated to B2B, and the other 50 is coming from B2C. I mean, we have still not abandoned B2C, and the B2C will be driven by the Sharia portfolios that we have launched. We think that there is a untapped demand there, so we would want to address that as well. And we will also ramp up our marketing to hit that 50 million under B2C.
Okay, the second question here goes, Akru went through ECF 1 and rights issue, and now ECF 2, but still struggling on surviving to meet the minimum paid up capital set up by the regulator. Can you elaborate more on this?
Yeah, we are a startup. So startup is usually always struggling because of the cash burn. Yeah. So again, under no illusions there. We are a startup. We are trying to make a dream work. So any little money that we get, we want to put it to use, and we want to execute with that money. The rights issue is not the kind of rights issue that you see in listed companies where they get a lot of money. We didn't get a lot of money from the rights issue. The rights issue was merely something that the founders put in. It was very little money. Okay, not enough money. Yeah. Hope that answers your question.
Okay. There are a couple more questions. So another one is, will you be partnering with PRS company?
Yes, we wouldn't mind. I would say that robo-advisors are perfectly set up for PRS, okay? Because we are low cost and we know retirement very well. So we would have no problem doing PRS. But just to tell you that the PRS market is very, very, very small, yeah? Even with all the tax incentives that the government has given, I also try to use up my 3,000 tax relief every year for PRS, but it's still a small market. So the non-PRS market is actually very big, but if robo-advisors were given the chance to do PRS, we would do it very, very well. All right, we would do it much better than the existing players.
Okay, and how would you do that?
Well, we have to be approved by the government, by Securities Commission. You can't just say you want to do PRS and then you do it, right? So it's a policy in execution by Securities Commission to say that robo-advisors can now qualify for PRS. The same thing with EPF, all right? EPF right now, when they allow members to take out funds for unit trust investments, you have to be qualified for that. You can't just go up to EPF and say, invest in robo-advisors. So a lot of this process has got to do with the idea of track record, yeah? Like, so what is the track record? When you ask that question, what is Akru's track record, right? Akru's track record is not my track record. It's not Julian Ng's track record, right? Akru's track record is represented by, for example, the S&P 500 index that has a track record going back to 1929. Okay, so we adopt that. We adopt that because we are passive. We buy and hold that thing. That's the track record. So I'm saying that this is not a deal breaker for the regulators because you just need to approve passive investing style and not change that one day to another, right? So once you approve that, we would be able to have that required track record for people and therefore make us very, very qualified for PRS and EPF.
Okay, understood. So another question is, how are you compared to your competitor?
So I think there are some differences between us and the competitors. For example, you would not find many robo-advisors out there that allows you to invest in gold, not GOLD, but financial goals, yeah, like financial objectives. We also very global. We try to minimize the usage of unit trust. We are passive. Certain robo-advisors, they make the fund manager do more work by getting in and out of ETFs, but we have largely held on to our ETFs without actually changing the allocation. We are going to be one of the very few robo-advisors who would do both conventional and Sharia, and we would introduce more products into our repertoire so that people can have that investing choice, but without actually being in that cost disadvantage. Yeah.
Oh, I see. I
Yeah.
see. So the main benefit would be.
I think that in terms of returns also, I'm glad to say that our returns are pretty satisfactory compared to other robo-advisors as well. Yeah.
So to summarize, so you have cheaper costs, better performance, as well as you have some product innovations that are taking place. Would that be correct?
Well, the other robo-advisors are also low cost. I'm just saying that we allow you to split your investment into financial goals rather than put it into one pot, So if you can split it, you have more financial clarity that will give you the peace of mind, right? And next time we'll come out with more and more financial goals. So we are being very creative with how we allow people to manage their money and to how they can have this bird's eye view of what's going on with their money. That is one part of it. The other part is that we are also going to have both conventional and Islamic, and I think that will offer people more choices.
I believe the demand for Sharia is definitely there. Is there any intention of going into crypto trading robo?
We wouldn't say no to different levels of asset classes. Okay, so something like crypto and bonds and equities, these are asset classes. So we're remaining open with asset classes. Perhaps next time we will allow people to choose, right? So if you want crypto in an allocation, then you can switch on you can turn on that button and we'll put some crypto allocation in there. It's not hard to do, it's easy to do. And if that's what people want, we'll give them what they want. The main thing about investing in different things is the ability to increase your risk. Now, over the long term, risk is your friend, all right? So if your behavior is to take risk, then you must expect that over the long term, you will earn higher returns from that. And if you feel that you want to take that extra risk to invest in crypto because it gives you higher returns over the long term, and I don't know whether there are a lot of crypto fans here, but they will tell you the business use, the business case of crypto, right? So I I don't know the technicalities there, but as an asset class, it's about risk and return. Higher risk, higher return. Should we give you that switch? I think so.
I see. Yes. So there's 4 more questions here. Did Akru use tax minimizing strategies like investing in Irish domiciled ETF mimicking US index?
What's the I would just ask a very basic question. What's the advantage of that? Yeah. Because the question is whether we are going to seek out like all these different types of investing versus something that is very established. I think I value that. I value seeking out investments that will benefit our investors, right? But this tax thing is something that is very often mentioned with ETFs, right? There is a tax element, especially if you buy ETFs that are coming out of the United States. But there are pros and cons about buying tax-saving instruments from other countries like Ireland, in the sense that one, they might not be so liquid, so you're not buying the ETF at the best price. Two, the cost of buying into those ETFs might be more expensive. Yeah. So for example, the US charges you like VOO, the S&P 500 ETF by Vanguard, charges you 0.05% per annum. That's extremely cheap, okay? 0.05%. What does this other Irish ETF charge you? Maybe 0.5%, 0.65%. I don't know, you know. So it will offset any perceived tax benefits that would be, you know. And thirdly, for Akru, if we want to trade in US versus trading in other market, like we got to pay our broker, right? So US is the cheapest trading market. And then we pass on that cost saving back to the customers, you know. But if we are paying very high cost to the broker, then we got to pass on that cost back to you as well, which is, I feel, not a good thing. So I think the tax advantages of other domiciles are at this point in time is not a done deal yet. Yeah, we would definitely look more into it, but at this point in time, I think the US ETFs still offer the best advantages.
Okay. Okay, got it. So another question is, can you share your product development plans for new products to be launched in the next 6 to 12 months?
We would be launching Sharia within that time frame. We would also be rolling out and executing our plans with our signed MOUs. They would start injecting AUMs into the company. Apart from that, we want to roll out certain other goals, financial goals, that is, to market them, to make sure that investors would have more option. You know, what we want to market are these financial goals to the B2C market, like your retirement. How do you plan for your retirement, right? You got to tell us You see, when you want to do the math for retirement, it's not so easy. I can't do it. None of the fund managers do it. They can't do it on the spot. Any financial advisors can't do it on the spot. So you first have got to say what your lifestyle is today, inflate it to the point of age 65 when you retire, and then make it last for another 20 years after you retire, inflation adjusted, right? I mean, if you do that kind of math in your head, you will get hurt. So we want to market that retirement goal. It's very good for everyone because it provides financial clarity to you, you know. So it's not just the product in terms of ETF that we are marketing, you know. The goal itself is a very, very good service, you know. And then after that, if you have, let's say you are retired, maybe you're a young retiree, right? 40 and you already have millions in your bank. How do you spend this money? How do you spend this money? Let's say you have 5 million in your bank and spend this money for the rest of your life every month. We can do that for you. You know, if you want to run it down to zero, we will tell you how much you can spend using the data, the returns data. Whatever you're not spending, we are investing that in the market, right? Or if you want to leave some money behind for your beneficiaries, then we will also manage that withdrawal for you. Every month, you will withdraw a small part of your whole investing pot, right? Your retirement pot. So these are, there are not only products which we are going to have, right? Different products that are coming into the market, but there is also the marketing of these ideas of how you can manage your money better, how you can get more clarity about the money you have.
Got it. Thank you for that. Another question here is consumer marketing totally out of the question because of the acquisition cost?
No, it's not totally out of the question because it's an important segment. We are still focusing our efforts on that. We are targeting about 50 million ringgit in AUM, assets under management, by the end of 2023. And I think it's a good long-term strategy to be still engaged directly with the consumer. And we definitely don't want to abandon that segment because that segment would just grow, you know. Okay, so here's the other thing about the robo-advisory business, yeah. Just like the banks and just like the unit trust, okay, when you put money into a platform, chances are 99% of people would just leave it there, all right? There would be one or two who will take it out for various reasons, all right? But the reason why the unit trust is managing 500 billion ringgit and the banks have over 1 trillion ringgit in their accounts is because people are leaving their money in there. So the consumer and the retail sector, their portion is just going to grow, and it will grow exponentially, and we don't want to abandon that sector.
Okay, another question here is, what is your cap table and valuation dilution for this raise, and what is your strategy of distribution?
I got the chart somewhere. I would have to pull it out. I think my co-founder is in the audience as well. Chong Leong, do you want to say a few words about this question? Let me just dig for that table, the cap table.
Hi. So while you're looking for the cap table, the dilution, the question is on dilution. For the amount that we intend to raise, maximum is 4 million, right? So that will cause a dilution to the existing shareholder up to the tune of 27%, right? Now, because there are incentive in more bonus shares and all that, so it can vary. So at the end, it depends on the amount raised, whether they come in at 50,000 and above, or whether, you know, the other how much they invest in, so that would affect the dilution. So in short, it's up to 27%. Yeah. So this is a cap table for the existing shareholding. And the distribution question, so maybe back to you, Julian.
Sorry, can I just clarify, what do you mean by distribution?
I think it's the
Products,
business, how to distribute the product. Back to the business side. So I think that's what he's asking, not the
Should be like,
distribution.
yeah.
Yeah.
Ringlok, can you, is it the marketing?
No, it's products.
So distribution means marketing of the product, is it?
The distribution of the product. So how are you going to go about that? So if your main avenue is marketing, then I suppose then it's marketing.
Okay, let me just assume that it's a marketing question, yeah, because distribution can also mean dividends. We're not going to pay out any dividends in the meantime because we still need the cash. But in terms of marketing, as mentioned in the B2B pivot, we are sharing our fees with the B2B partners, and effectively they are doing the marketing for us. Okay, so if you see a certain financial advisor, every year they clear 500 million, 1 billion in distribution, right? It's not a big leap for them to actually clear that for Akru because we're sharing fees for them. So that is the marketing, the bulk of the marketing being settled by this B2B pivot. And as far as the B2C segment is concerned, we will continue using the normal channels. We will continue to optimize our social media and Google advertising so that we can convert more. You know, we have those digital marketing strategies in our plans, and we've been sort of honing them so that we can do better in terms of converting the conversion numbers coming to our website. But we feel that with the launch of Sharia, I think that there would be a kind of a big bash, you know, that splash in the market that Sharia is being launched, that would have got a positive ripple effect to our products, other products as well. You know, when you talk about Sharia, that Akru also has excuse me, conventional products. Akru also have all these financial goals. Akru's performance was not bad. You know, that kind of thing. So we're looking forward to the launch of the Sharia. We'll definitely make a big splash out of it.
Okay, got it. So there's another question regarding EPF. So whether EPF is in Akru's pipeline in terms of managing their funds, or having EPF money to be invested in Akru.
So the question is whether EPF would invest in Akru, is it?
Oh, I think it's more of like, is there any sort of collaborations you guys are working on with
I see.
EPF?
Okay. No, there isn't, because this is policy level. Yeah. I mean, it's a good thing that it's not so easy to take your money out of EPF. Otherwise, the political scene would be very interesting. Yeah, people will be arguing about it every day. So there needs to be due process in this, and but I'm just saying that today already 8 to 10 billion ringgit per annum, okay, is being withdrawn from EPF to invest in very, very expensive unit trusts. What is Akru's AUM target? In 3 years' time, we are targeting 1.5 billion ringgit. It's nothing. It's a drop of the ocean in the scheme of things, because 8 to 10 billion ringgit is being withdrawn a year. Okay. Now, if you read the news about EPF, right, this is what's happening. It's getting harder and harder to get returns from Malaysia, because EPF is 1 trillion, right? The Malaysian market also, I don't know, my guess is maybe around 1 point something trillion to 2 trillion anyway, right? So EPF is too big for the Malaysian market already. So the only way to increase the returns for EPF is to invest overseas. But I feel these are my personal views, all right? Don't go and ask EPF about this. My personal view is that EPF cannot openly release money into the global market. They have done so over the last few years to good effects. All right, our returns are being held up. Our returns are good in EPF because of overseas investment, but they cannot go gangbusters over it. So that's why they allow you to withdraw your money to invest in unit trusts. All right, and then a few years ago they made the policy that the unit trust can be 100% global, 100% overseas. They used to have this rule where you can only invest partially overseas, the unit trust partial overseas. Now, full overseas is okay. And what do robo-advisors invest in? We are global. Akru is like totally global already. So I'm just saying that robo-advisors in general is not just Akru, but all robo-advisors, we fit into that requirement, of what makes a good candidate for investments of EPF withdrawals. Robo-advisors are very, very good. PRS robo-advisors are very good,
Okay. I think just one last question before we move on. It was more of a request than a question. So I think one of our audience members want to look at the incentive slides again. I think the one you have in terms of the
Sure.
management fee waiver.
No problem. Let me just dig it out again. Here you go. Oh, sorry, this is not the one. I shared the same one again. Hang on. Is this the one?
Yeah, I believe.
Are you seeing it? Yeah.
Yeah. So this is the one, if anyone wants to have a look.
Maybe we can put this up on our campaign page.
Yep, not an issue. We can just put it in the deck or in terms of the incentive segment. Okay, this is good. If this is good, I'll move on to the closing. So let's take over and share the screen. Okay, so I think before we go, since we're at the topic of investing again, I think Julian did a very good job covering, the philosophy of investing in the stock market in the long run, not trying to catch the wave. The same thing it is, if you look at the market right now, we don't really know if it's going up or it's going down. Everyone have their own opinions. I'm not here to debate that. So, but what I'd like to introduce to you is the potential of private markets, right? Like what happens if you were to invest, in the likes of Uber or Figma in the early days. You can look at the return profile. It is insane. Well, I'm not telling you to put all your money into private markets, but I'm telling you to maybe start looking at it and considering it as a portfolio diversification. So yeah, so the why, right? So if you look at the market, you're looking at 8 to 10% returns in the long run, year on year. That's pretty nice. But what I'm suggesting is maybe carve out a small portion of your money and maybe can put it into private equities. And that's what we do, right? We want to bring, good quality deals to the crowd so you can sort of diversify your portfolio and maybe invest into something like Akru. But no, in other words, we want people to invest in change, right? So everyone likes to talk about change, but nobody really does anything about it. So I'm saying put your money where your mouth's at. So if you want to invest for impact, so each one of the companies on our profile here is doing impact. So if you talk about Akru, it's about where do you put your money to safeguard your retirement, right? So Akru is coming out with different ways, different products, so you can safeguard your retirement for future generations. That's one. Like you can look at QMed, they are expanding existing healthcare capacity. Green Factory, we're combating deforestation and arrows oil. We are sucking up the UCO to power the biodiesel industry. So each one of them have their own unique impact. So feel free to look at them. And the last thing that I want to warn you guys is risk and return. So, obviously you're investing in early stage companies and, they haven't quite figured it out, like IPO companies where they're all compliance and structure in place. But that also means that the return for these companies are expected to be a lot higher. So, that's just something for you to keep in mind. And in terms of the investment structure, if you do consider to invest into Akru, you will be sitting in the nominee structure. So if you look at the cap table, you'll be represented as 133 nominees on your behalf, and all of you will sit under that nominee, and the nominee will sit under the cap table of the issuer. So you might ask, how do I know these guys are not scammers and they will run away with my money? Well, first of all, we are a regulated space, and all your monies are actually sitting in a trust account, so we do not have access to it at will. So we can't just tell the trustee, say, hey, give me money, and that's not going to happen. So there's proper protocols and it's well governed. And if you are thinking about what happens if the campaign fails, that's where we will refund all the monies when the campaign fails. If you want to pull out your money after you've decided to invest, there is a cooling down period. Once the campaign is successfully closed, within the 6 days, we feel free to do any refunds. So if you're thinking about a how-to video in terms of creating an account and investing on an ECF campaign on our Leet Capital site, I'm just going to play you a short video.
I just want to brief you about Leet Capital in terms of if you've never invested before. I'm guessing 70% of you may not even have an account with us. Just want to quickly walk you through the process of what it entails to invest into a company on an ECF platform and how simple it is. So the steps basically to register as an angel investor or any particular investor on our platform is, first step, just go to leet.capital. That's the website. It's a brand new kind of domain name. So there's no .com, it's just leet.capital. Select sign in if you've got an account. If you don't have an account, of course, you click register and you provide us your details. So when you register, there are two kinds of modes you can register on, whether you want to raise money, and that's what we call an issuer. But in your case, if you're an investor, you say you want to invest. And when you invest, you will give us your typical registration details like your phone number, email, and a password to the site. And then there'll be specific things that we have to do from being a regulated platform. We call it KYC, where we have to make sure that you are who you say you are. And that basically means giving us details, your national identification cards, and also pictures of it back and front. And this is where we will actually on the back check to make sure the names and the ICs match what we see in that particular picture of the IC back and front. And some of the automation is basically going to check this for us. So there will be a quite delay for you to invest because we go through this process and it has to be vetted by us before we allow you to make your first investments. Also, as part of you registering, you need to kind of qualify yourself in terms of which bucket do you belong to when you say you're an investor. Everyone can be a retail investor, and what that basically means is you have a soft cap of 5,000 ringgit per deal. But if you want to go beyond that, it gives you a warning statement just so you're aware that as a retail, you shouldn't be exposed too much into a deal, but you can basically do more than 5,000 ringgit. There is a cap though for retail of 50,000 ringgit, and it's entirely for a year on a particular platform like us. So we do have a dashboard where you can see how much you've been exposed to. And when it hits that hard limit, we basically stop you for that particular year. Now, in terms of the other categories of being an angel and a sophisticated investor, that's defined by the guidelines of Securities Commission of what it means to be an angel, where we talk about no less than an annual income of 180,000 ringgit. And for sophisticated, it's basically personal assets exceeding 3 million. So to be in those categories, what we do ask for is proof. So you either send us, if you want to, a bank statement. It could be your pay slip, which what most people would basically use, or it could be a statement of your current holdings within Bursa to show what your net assets basically are. So you could choose what you basically need to disclose for you to go into a certain kind of bucket. Once that's done, your account's created, you get access to a dashboard to show you, based on your retail, how much can you invest and how much you've invested. And all the statements and updates of a particular portfolio will all be within this website, so you can keep track of everything just by going to Leet.capital each time. Eventually, if you're trying to even sell your shares in the future, we have a secondary market basically coming up soon. That will also be tracked within the same platform. So once you basically have it registered, let me just walk you through how simple it is to even invest into something. Same thing, go to Leet.capital. In this case, you would sign in and then click Invest Now. It will give you an access to a set of deals that are basically running already on our platform. Let's say for this one, Green Lagoon, you will click on More Details to get into the campaign page. And this is where you're going to get all the information about the campaign, being the one-pager, the pitch deck, the term sheet, the agreements, the subscription agreement, whatever that they basically are disclosing, even in terms of their audits, will all be basically listed here at the bottom. And if you are okay with this deal, you click Invest Now. So just a quick highlight in terms of what these numbers mean. So there's a minimum and a maximum raise for each particular campaign. A company would only be able to receive the funds that basically you transfer to them if they hit the minimum. If they do not hit the minimum, then that money will be returned to everyone. Exactly what you put in is what you get back. There's no transaction fees that you basically incur. Monies that basically get transferred while waiting for this campaign to be closed is held in a trust account with us. So therefore, it doesn't go into that issuer's company bank account until we make sure that the campaign closes. And subsequently, there's also a what we call a grace period, right? That cool down period for 6 days. And this is when you can just have that moment of saying, do I really want to do this? If you want to back out right now, that 6 days is the moment you can back out, take your capital, no questions asked. And then we basically close the campaign and the funds get into the issuer itself. In terms of how the company is structured at back, we use a nominee structure to hold your investments so that their cap table is pretty clean. And we don't see 300 people within their SSM registration itself. All that basically gets held in that SSM cap table would be lead nominee Sdn Bhd. And we have a back-to-back agreement with all the investors that we're holding it on your particular behalf. So once you're sure you want to invest in that, you click Invest Now. You would basically specify how many lots you want. You acknowledge that. You click Confirm. You will be given a unique reference ID. And this is the reference ID that you'll quote when you basically make that transfer via a bank transfer, an online transfer, whatever means you basically need to use. Don't worry about this number. If you forget what this reference number is, a copy will be sent to you via email. But it will also be in your dashboard, so you can track back what that unique reference ID was, so we can make sure that we kind of do the reconciliation on our particular backend itself. Once that's done and you basically have transferred that, all your particular investments would be listed on your particular dashboard to see what you've invested before. If you had any exits in the past, it will be under the My Exit section to basically see how much you've been making in the past itself. And that's it. That's how you could easily invest in.
All right, I think that's about it from us. Thank you so much for spending your Saturday morning with us. If you have any other questions, feel free to reach out to me and Julian as well. So thank you guys. See you next time.